is Mike Mascia at Kedwalader. Thanks for tuning in to Fund Finance Friday Industry Conversations. I'm excited to have with me today my buddy Charles Inkeles, who just got named the head of U.S. Fund Finance for the Industrial and Commercial Bank of China. Charles, thanks for joining me. How are you, man?
Hi, Mike. Great. Thanks for having me on.
You bet. You bet. It's good to see you. It's been a long time.
As indeed. Yeah, crazy times. We continue to be in here.
Well, congrats on your new role, man. I'm really happy for you.
Yeah, so I'm at ICBC, which is, as many will know, the largest bank in China. I've been there for just over a month now already, believe it or not, and so far it's going very well. It's fund finance is a bit of a newer product for the bank, but there's a lot of excitement about it, and it's a pretty broad mandate. We're going to do subscription finance, NAV finance, and lending directly to the asset management companies. And so the bank has done about, I'd say, 3 to 5 deals in each of these 3 areas already. So there is some, definitely some familiarity with it. It's been done to this point out of a broader FIG group. And so this is where they have done some deals, have a portfolio, like the product, have been looking for areas to grow in the US, and said, okay, we have to bring in someone that has a little more background, and specifically in the fund finance area. And so I'd say we will now be looking to grow all 3 of these areas, and it's a pretty nice product offering if you go in and speak to a client, to be able to bring all 3, because obviously, as you know, the client is the asset manager, the fund is just a legal vehicle, and so you go in and you talk to the manager, and instead of having sort of one fund finance lending product offer, you can talk about, look, we can lend at the management company, we can lend at the fund. If we do that, we can do it against the subscription investor commitments. We can do it against the assets, a combination thereof. And so there becomes quite a vibrant conversation about various things you can offer to the manager.
So are you guys in some of the other regions in fund finance already?
Yes. So in addition to the U.S., we are also pretty active in the London market. We have a team on the ground there, also a relatively small team, but pretty knowledgeable team. And so they've done some transactions, and there's pretty good collaboration between the U.S. and the UK teams. Ironically, we don't have a team anywhere in Asia, so transactions that come out there we haven't done really to date. Many or possibly any in the Asian market, but we've already had a prospective one come up where we were working with our London colleagues to figure out who will take the lead on that, or maybe do it together. And I think we'll get it's obviously for us our core market, and so we will figure out how to do fund finance there. We do, as you might guess, offer to any fund manager clients that are active in the Chinese market and sort of the broader Asian markets, or interested in being over there. There's a lot we offer in terms of broader banking capabilities. So that's something we have. And so the fund finance is just should be a pretty easy next step for that.
Yeah, so great. Well, switching gears with you a little bit, any market developments in the U.S. that, you think are noteworthy for people to know about?
Yeah, well, I would say the market, as probably yourself or others in the space are seeing, it remains pretty robust in fund finance, and I'm not surprised. This is what we've seen in the prior financial crises as well. One thing, I've never considered this a cyclical sector, because in any market environment, there are going to be fund managers, investors that want to take advantage of the situation. And so in a crisis like this, or in a recession, you'll see funds that are buying distressed assets, lower value assets, leverage lending, debt funds, where banks maybe are taking a step back. And so there is fundraising going on, new funds being launched, a demand for the product. And what you see is that some of the banks will take a step back in this type of environment. They're looking at their portfolios. Maybe other areas of the bank are causing them to take a step back. And so there's a lot of opportunity for any bank that has balance sheet to deploy that's able to remain active. And one nice thing about this type of environment is that you start to see, in a strong environment like where we were a year ago, you can't control the structure as well. So you start to have a covenant light environment, or equivalent thereof. You have to sort of take the structures, even if you're leading a transaction to remain competitive. You have to take what the borrower is really what they want in terms of the structure. In this type of environment with fewer banks there, you have an ability to dictate the structures a bit more. And so while this will be considered generally a higher risk environment, you mitigate that by being able to have more structure. And so it's a bit more actual real structured finance, but you don't have necessarily riskier, taking more risk to be operating in this environment. You're structuring around that risk and kind of remaining risk neutral. Now a bank does have to spend some time and resources looking at its existing portfolio. These portfolios have performed pretty well through the prior crises, as you've seen. And they do appear to be again here. But people in the bank that don't know the product as well are going to have, I think, most bankers will see a lot of questions coming, analyze the portfolio, how's it doing. So that can be a bit of a time suck. But if you have balance sheet and ability to continue to remain active in this market, it's a more interesting time, better opportunity, actually tighter structures, and pricing is tweaked up. So it's always nice to get paid a little more if you're doing paid for sort of structuring the deals. So it's a good time to be a bank who's able to remain active in this space, I'd say.
Yeah, great. Well, listen, man, it's awesome to see you. I appreciate you making a little time. Will you be at Virtual Week next week?
Yes, absolutely. Looking forward to it.
Yeah.
Too bad we can't do it in person. Hopefully that we'll be back to that before too long. But if we can't do it in person, we'll do it virtually, right?
Yeah, sounds good. Well, I'll look forward to seeing you on the screen next week. Thanks for joining me, Charles, man. It's good to see you.
Thanks, Mike. Good to see you. Appreciate it.
Thanks for dialing in to Industry Conversations. Hope everybody has a good weekend and look forward to seeing many of you next week at the FFA's Virtual Week. Have a great weekend.
The material and information contained in the podcast is for general informational purposes only. Any use of the audio within this podcast without the express consent of Cadwalader is prohibited. Quotes from this podcast may not be used without the express permission of the speaker.